Welcome to Markets Now. I'm Michelle Rook along with Matt Bennett with agmarket.net. Higher day except for the wheat market. And Matt, soybeans a gap higher in the overnight session. We were pushed here in both the meal and the soybean market trying to put in risk premium after the Argentinian frostbite. How bad was that damage? I mean, we couldn't even take out last week's highs.
Yeah, I mean, it sure doesn't seem to me that the damage was widespread enough to really get yourself super fired up. You look at most of the forecasts, most of the folks talking about weather say that it was fairly localized and you weren't talking about extreme losses by any means. And so, there's definitely been a lot of issues with this Argentine crop. We know it's already been hurt. It's probably a sub 40 crop. USDA is at 41. But I don't know how much lower you get than that. I feel like a lot of times when we get into this South American forecasting, especially in South America, it seems like it's kind of a race to the bottom, whereas USDA takes more of a slow approach to try to get to their number. And that's actually served them well in the past. So whether we're talking about drought or whether we're talking about freeze, I think sometimes we overdo it just a little bit. And it certainly seemed to me that there was a lot of unwilling folks to come to the table and buy into this story whole hog. I think if you would have made new highs for the move or here lately, I think that you maybe could have unseated. Maybe you got a little bit more buying come into this thing. But as of right now, it's going to be very interesting to see if we see follow through buying on Wednesday, because I'm not so sure that I believe that that'll happen just yet.
Yeah, we got to get the meal to take leadership again, get above and close above that $500 mark. So we'll watch that. But, how long do you trade the Argentinian story? We've been talking about it for 6 weeks. I mean, it's kind of an old news story, isn't it?
Yeah, I mean, it's an old news story, but I mean, essentially another thing that's kind of going on is you look at, for instance, in Brazil, you've got some pockets of dryness.
Yeah.
Some of those forecasts for the Brazil crop aren't inching up to 155 and above. I mean, we saw one last week that was 150.9. So you've got to think that ultimately, if you pull back the Brazil crop just a little bit, the total loss combined versus what we were originally projecting between Brazil and Argentina, you could be looking at like 500 million bushels. And so off of what they originally forecast. And now granted, it's still going to be bigger than what we saw a year ago. So it's a little complicated, but the bottom line is this, whenever you look at total production, I've got to think that you're going to see enough world production for the time being. I can't get super bullish at these types of price levels with a 150 Brazil crop, but I do think that may be a little bit of your underlying strength here, Michelle.
Yeah, and when do you start seeing Brazilian harvest pressure overcome that?
Yeah, that's a really good question, because most of your folks are saying that they haven't sold a lot of soybeans yet. So with that being the case, you've got several billion bushels to sell. And so you got to keep that in the back of your head. There's definitely going to be some hedge pressure into this market at some point in time. When do I think that we kind of see that? You've got to think that it's going to just pick up steam as we go through here. So I'm talking over the next 2, 3, 4 weeks. And so as you get this first crop harvest wrapped up, there's no question in my mind as it gets to port. I mean, there's no doubt there's a ton of selling that's going to be going on. And I've got to think that's going to provide a bit of a headwind here.
Yeah. So corn kind of caught between the tug of war of higher soybeans and meal, lower wheat, but that market keeps consolidating, coiling up here from a technical standpoint. When do we break out of here, and which direction do we go?
With all of your moving averages within a dime, I mean, the bottom line is, as you said, we're coiling up. I mean, we are simply in a situation where we're going to see a breakout. And typically, whenever you coil up this tight, many times the breakout can be substantial. And so it's really hard to predict which way this thing's going to go. One thing I've been trying to tell folks as I've been out and about speaking is if it goes up, we're all going to be happy. We'll be patting each other on the back and having a good time. If it goes down and we don't have some sort of a plan in place, I think we're going to be pretty disgusted with ourselves, because essentially this market has kind of lulled us to sleep for the last several months. Just simply not a whole lot of volatility. The market's been sideways. At least it's been sideways at a very high price. And so I would be very hesitant is to sit here and put all of my eggs in one basket. I do know that cash corn is going to have good value in a lot of places. And if you see a drop in futures, probably see basis respond at some point. I just don't know that that's going to be just yet, because I think a lot of originators have actually got their needs met at least through the next several weeks.
So wheat down today, maybe because of some of the forecasted precip, but we have really not traded a lot of the geopolitical headlines that could have moved the market here today. Where is that market ultimately going in your mind?
I mean, ultimately, whenever you look at what's going on, for instance, in the Black Sea region, I think that people just look at it and say, I mean, they need something bigger to happen this next go around to get the market to move. And that's not cool, because I know that that would suggest that it would be a major escalation of war. But I do think that it's going to take something pretty significant to get us to go on some sort of a tear higher once again, like we saw early on in the war phase. So what's wheat going to do? Like you said, I mean, this weather situation certainly could shore up this wheat crop. If you don't see abandonment, you've got much higher acreage than what we had a year ago. And so, yes, your carryout levels have gotten to, sub 30%. That's something that we haven't ever really seen in many, many, many years here in the U.S. And so could that grow back up to 35% or better? Oh, absolutely. And so if that's the case, then it certainly shores you up to an extent. I've got to think that weather's got just as much to do with how we started this week as anything. That, and I do think there was some spread activity as well, where we were selling wheat as part of spreads, whether we were either, versus soybeans or corn.
Yeah, that makes sense. Cattle market, live cattle scoring a few contract highs again here today. We've continued to be pushed by the cash, but now the boxes are on fire. How much farther do you think it's going to push that market?
I'll tell you what, here's the thing, Michelle. We just talked about the fact that we're talking about rain coming into the Western Corn Belt. A lot of your folks are saying that they feel like we're going to heal up in the Western Corn Belt. I sure hope we do. I really feel for the folks that have gone through what they've gone through out there. But if you heal pastures up and you think that you're going to take fat cattle and put a dent in prices, I think you're sadly mistaken, because if you start retaining heifers in an environment that fundamentally is probably the most bullish cattle setup I've ever seen, you could be looking at some pretty exciting times. Now, a lot of folks are saying, I want to step in and buy these cattle. I just want to see a pullback. Well, the market's not really afforded you the opportunity to do that. And I think it's because it's a very bullish setup. It's not only the total cattle herd, which is at 60-year lows. You're talking cattle on feed in most states are well under where we were at a year ago. And so, again, you start retaining heifers, it's going to get pretty interesting.
Hog market up big today, and cash and cutouts kind of pushing that story finally. But do we got enough in the tank to get these funds to cover their shorts?
I think I'll be a believer whenever we see it happen. It seems like you look at this chart as far as cattle are concerned, you'll take off on a tear higher, and then you go back down, and take off on a tear higher and you go back down. But I think maybe overall, demand for protein is still awfully strong. And so, if you see cattle continue higher, maybe you see hogs able to finally catch their breath a little bit here.
Thanks so much for joining us. That is agmarket.net's Matt Bennett with Markets Now.